What's going on, YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I got to work a little early. I'm sitting in the parking lot, and I decided to make this video because, first and foremost, I like to follow up on some of the things that I do. And one of the videos I made a few weeks back, or actually last week, was about shorting Bitcoin. And thought a lot about that process. And while the analysis wasn't a bad technical analysis, I did not reach the proper outcome because I did not flip my mindset to a bullish market. And crypto is now in a bullish market. And I'm going to explain what I mean by that. So I'm going to try to do it as quickly as possible and to do it where it's really easy to understand. So looking at this highlighted area on the screen, everything was signaling that the price should come down and do a retrace. If you put RSI on this, there would be a bearish divergence. Price was getting very, very sluggish. There's a lot of doji candles in there, a lot of inside candles, a lot of things that would signal reversal or retrace. Now, what I want to do is I want to swing back. I want to swing back to the bear market. And what a lot of people did wrong in the bear market is that they kept trying to go long on what they thought was all the bottoms. We're going to go all the way back and see how some of these areas where we hit a low, when we hit a low here back in May 12th, we had a straight sideways consolidation. We didn't come back up and retest this last breakpoint area. We didn't have a 50% retrace on the Fibonacci levels. We had a straight sideways retrace and then dumped down again. When we were in this consolidation here, we were in a consolidation for a while, and you would think that you come down to the low point of that breakout, that there would be a pump to the upside. It just didn't happen. You have to be in the mindset to not counter trend trade. This was a bullish scenario. You had no idea where the low was going to be. You had no idea how far we go down before it retraced. The only thing that you can do is look for a retrace to then show weakness and short further. Here, going back to present day, the only thing that you should be trading on this swing chart, on a daily or 4-hour hourly chart, on the minutes and scalping, do whatever that smaller trend is. I'm not saying that this is going to apply to scalping, but when you're doing this, when you're trading this on a swing daily or whatever the case might be, you have to look at if there's a retrace from here. I'm not going to try to short from 37 down to 33 or 32. I'm going to see how far it comes down. And if it hits a 0.5 fib or it hits a 0.62 fib, I'm going to start positioning myself long. You're looking for entries on a discount to get long in this position. You're not looking to try to find the top, because what happens a lot of times is the top isn't where you think it should be. Just like in a bear market, the bottom goes a little bit farther than you think it will. Or you think you're at the bottom, it consolidates a little bit and goes down farther before retracing. Just like this did here on the upside. It consolidated for days before then pumping farther to the upside. So again, the trend is your friend. Know what the daily trend is doing. Know what the overall trend of the market is. And right now we're in a slow portion of a bull market. We're not there yet. We're not in the full euphoric bull market, but we have entered into the bull market. Alts are pumping. Bitcoin's been pumping. And honestly, at this point, there might be another retrace. There's likely going to be a retrace. But it is not fiscally responsible to try to time a short position on that retrace. It is much easier to win and much less likely to get just hammered on a loss by setting yourself up for long positions in an area of discount. So that being said, guys, that's it for today. I just wanted to clarify that. Hope you enjoyed this video. Hope you got something from it. As always, until next time, peace.